landlords in the UK have all got their hands in their heads, panicking, saying, how many more rounds of boxing are we going to have with the government? Because I'm not sure if landlords can take any more punches, and it's only going to get worse. So if you own rental properties, or you're thinking about buying your first investment property, or just venturing into investing in general, these 6 taxes will eat into your profit, and it's going to make property investing significantly less attractive. And if it's significantly less attractive, it means less money will flow into that market, and I think it's going to have impact on renters, which means if investors feel like they can't buy more properties, or if they feel like the investment is being strangled, then they will try their best to maximize and extract as much income and as much cash as possible, as quick as possible, and they can leave the market with as much profit as possible. So do these taxes really benefit first-time buyers, non-homeowners and renters? Or is it just an attempt to vilify landlords and punish landlords for daring to buy investment properties? I'm going to break down 6 of these taxes and show you how these taxes are killing property investors and strangling the life out of landlords. And hopefully I can give you some strategies to soften the blows. My goodness, it must feel like 10 rounds with Anthony Joshua or Tyson Fury. Ding, ding, ding. The average property investor versus our government. Who wins? Well, clearly the government. So the first tax, Section 24. So before 2017, landlords could deduct mortgage interest from their rental income, and that would be before they pay tax. And effectively, which is backwards and kind of counterproductive. Landlords now that hold properties in their personal name are taxed on revenue as opposed to taxed on profit. So before 2017, landlords could deduct mortgage interest from their rental income. But now that's completely changed. That relief was removed. It was stripped. It was pulled from under their feet. And landlords only get a 20% tax credit regardless of their tax bands. If you're a high rate taxpayer and paying 40% and in some cases 45%, you're losing thousands of pounds. That is a tax against landlords. That is a tax against people who are risking their own capital, risking their own money to provide accommodation in this country. Landlords are being penalised via thousands of pounds in taxes for providing accommodation. Your tax bill is based on total rental income, which is absolutely crazy, as opposed to your total profit. Which means if you're barely making any money, if you're struggling to break even, the tax man still wants their slice. They say, hey, well done for buying property, well done for helping us with the housing crisis, but hey, come on, you gotta pay up. You gotta pay up. The only solution around this is smart accounting, but more importantly, this is why you will see new investors and maybe older investors buying properties in limited companies, because when you buy property or when you own a limited company, you are taxed on profit and you pay corporation tax rather than income tax. But of course, setting up a company requires an accountant. It requires yearly responsibilities. It requires filing accounts. It has its own complications. Number 2, capital gains tax. If you're selling a property, get ready to pay capital gains tax. It's like you're being penalized again for making an investment that's going to look after you in the future, so you don't have to be reliant on the government and the state. You're being penalized for buying something at the right price and the value going up. If you sell your rental property, you're going to pay capital gains tax. If the property is increased, you're going to be paying at a basic rate around 18%. And if you're a high rate taxpayer, you're paying around 24% capital gains tax. So where is the reward? Where is the thank you? Where is the MBE or the OBE for the landlord that's risked all their money, all their savings to buy a home, to provide accommodation and prop up this failing housing market in the UK and support the government in their failures to provide accommodation? Where is the thank you? Look, let's put it in perspective. If you bought a property for £200,000 at some stage and you sell that property for £300,000, you could be paying around £24,000 in capital gains tax. That is theft. That, in my opinion, is theft. That is stealing from the little man to feed the government. And to make things worse, capital gains tax was slashed to just £3,000 in 2024. That means more of your profit is being taxed. Now, there are a couple of ways to reduce your capital gains liability. You could be creative, of course, speak to a professional, but one way to reduce your capital gains position is to use your partner's, your spouse's allowance, and you can transfer ownership before selling the property. Now, of course, that comes with its own challenges, and you've got to make sure you seek professional advice on how to do it correctly. Alternatively, the best option is not to sell and hold that asset for the long term and milk it for the income. So if you can't make money from selling it, then you've got to make money from the rental side of stuff. And that would only disadvantage renters more. Number 3, stamp duty. When you buy an investment property, then you're paying extra stamp duty. Landlords, second home buyers pay an additional 3% surcharge on top of the standard stamp duty charges. Stamp duty makes it difficult for landlords to expand their portfolio. It makes it harder to de-risk your portfolio. So it means landlords will have to buy less properties, but more importantly, maximize their current portfolios by increasing rents and costs. But more importantly, one thing that we need more in the UK is actually more home ownership. But more importantly, we also need landlords to buy more properties, to get more properties on the market so that people can rent them. But this stamp duty position just discourages anyone. In many cases, it makes sense to take your cash and rather than putting it into property, put it in the stock market where you don't have to deal with the vast majority of these taxes that are slowly strangling the property market. An option here would be to buy cheaper, lower value properties because you pay less stamp duty, but it's counterproductive because if you live in London, then are we really suggesting that you fly over to Newcastle and buy cheaper properties in Newcastle to benefit from a reduction in stamp duty charges? One thing I would suggest if you are an investor or a landlord, don't be afraid of this new stamp duty change that's coming into effect in April. Get your negotiation hat on. Get better at negotiating and try your best to negotiate your new stamp duty position with the seller. So if typically you would have bought a property for £300,000 and your new stamp duty position would have been £9,000, you might want to negotiate buying that property for £291,000 or even going 50-50 in terms of that cost with the seller. You've got to get significantly more creative, otherwise it becomes untenable, unsustainable, and we will see people leave the market and go and invest elsewhere. Oh God, inheritance tax. That's a major one. If you pass away or when you pass away and your estate includes properties or land, and if it's worth more than £325,000, your family or your beneficiaries could be faced with at least a 40% tax bill on anything above that threshold. With house prices soaring, with the average property price in the UK right now at £300,000, with it going in an upward trajectory, what does that mean? It means the vast majority of people, when they pass away, their children are going to be stung with this tax. More landlords are going to get stung with this tax. Now, of course, there are ways to mitigate this, and wise, savvy investors look at things such as trusts, or maybe gifting assets while you're alive, or you could structure your property portfolio within a company to minimize or reduce your liability. As a property investor, estate planning, putting things in order to mitigate against these absolutely crazy taxes that are strangling and stealing from landlords is vital. Council tax on empty properties. A landlord risks their money to buy a property and they are charged significantly higher council tax rates while the property is empty. I think that is preposterous. I think that's signs of craziness. I think that's an indication of some sort of illness. This is a growing issue for landlords across the board, including myself. Many councils now charge double the standard rate for properties that have been left vacant for more than a year. It's a way to discourage people from having empty properties. It means the government accepts that we need properties on the market, yet you will penalise an investor for using their own capital, risking their own capital, using their own money to refurbish the property, to give them to you so that you can rent them out, but yet they are penalized for having empty properties. Landlords, if your property is going through an extensive renovation and it's going to be some time, the wisest option would be to contact your local council and find out if there are any exemptions. Otherwise, you will be paying double council tax, which eats into your profit completely. And if your property is actually sitting empty, in some cases, you can speak to your local council and ask for an exemption if you're genuinely, and you can show evidence that you are struggling to rent the property, hence why it's sitting empty. Number 6 for me is the biggest scam of all property taxes levied against landlords. And it's this licensing scheme that the government are rolling out across the country. It's a scam. It's a clear scam. Many councils, in fact most councils, have rolled out or are in the process of rolling out some sort of selective licensing scheme, aka we want more money to do absolutely nothing with it. Councils are introducing these selective licensing schemes that require landlords to pay fees in the thousands of pounds just to rent out their properties. It's absolutely crazy. Yet they struggle to get bad tenants out of properties, and they're just penalised and charged money for absolutely nothing. Show me where the money is going. So if you are buying properties, you have to know, or you have to be careful if you're buying a property in a selective license area, because that's an additional cost and there are certain requirements that need to be upheld. Taxes across the board for landlords are making life significantly harder. Now, I know for the average person, you don't care, and why should you care? It's these rich landlords and they deserve to be taxed. But many people fail to realize that these taxes have a way of swinging back around and affecting the end user, which is usually tenants. These taxes that have to be paid have to be recouped or reclaimed in some form, and that typically affects tenants. I don't know how we've got ourselves into such a mess that landlords are the villains, but these taxes are making life harder for landlords. But I want to reassure you that with the right strategy, with the right level of education, you can and you should try to minimize this impact and not cause you to flee the market. But hey guys, I hope you get some value from this video. Let me know your thoughts in the comment section. What are some of the taxes that are affecting you as a landlord that you are fed up of? And should landlords pay more taxes? I'd love to hear your thoughts in the comment section below.